Good weekend, all. Ira Epstein with your weekend edition of your SPDR ETF stock wrap-up. And this wrap-up is for Friday, a frigid Friday, February 3rd, 2023. I don't know about you, but the nation is in a freeze, as you know. Chicago, we're near zero. I had to go out and put out the salt on the ice, and yet we're going to be 40 tomorrow, maybe 50 Monday and Tuesday. So the big warm-up is coming. I pity the people in the Northeast. Wow, I'm hearing what Maine's going to be, Vermont, Connecticut. We're talking 40, 50. And in Caribou, Maine, I think they said 104 wind chill below zero. I mean, this is record-setting, right? It's breaking all kinds of things. But it almost reminds me of weather. You know, you come in like a lion, go out like a lamb as a kid, but it's February. This doesn't make sense. But it's been warmer than normal, and we've seen that pressure in natural gas and other markets. Now let's get to the day's event, the shock. First of all, this was a trifecta week. What do I mean by that? Starts off with the Fed on Wednesday, where Fed Chair Powell, I think, just totally blew it. Then we got to the European Central Bank, Bank of England. We saw the JOLTS data report. We saw ADP, Challenger Gray, and we can still see that what? There is still all those ads. People want to hire like mad. So, you know, we were looking for a jobs number, or the market was, between 125,000 to 300,000. That was the range that I think was the sensible range that I read in numerous spots, with the center point being about 187,000 jobs. 517,000 new jobs. I mean, I almost, when I saw the number and then I'm listening on TV, I was speechless. I mean, I didn't even know what to say. I immediately am looking, well, is this a revision? And then I saw December was revised up. So the Fed doesn't have this under control yet. It's that simple. Do not think that they've missed the boat, but the Fed chair did. He's not hawkish enough. He talks the game that he doesn't want to make the Volcker mistake, but he wasn't hawkish enough. He has a chance on Tuesday to correct that. And the people that he sends out, you know, all the Fed members are going to start speaking this week. You'll see him every day. They've got to come out and be questioned on his 500,000 jobs number, how strong it is and what it does for the economy. That's the good thing. These people working prevent a deep recession. Bad game is that all these people working create inflation. Every time you're getting these new jobs. Plus, I was hearing Steve Leisman today on CNBC. He was looking at it and he said, there's over 800,000 people, new ones that have returned to the workforce. They got to get jobs. So we're in a burst right here. What will happen is they'll get their jobs and then we'll start slipping back, because a lot of this is the service industry. That'll keep going as spring comes, because everywhere that you want to go for spring, the outdoor, they haven't hired those people yet, typically. You know, Florida, they got them, of course, but most of the country doesn't. So that's going to happen. All the daycare programs, the pools, the outdoor restaurants. Okay. We know that there's always going to be the healthcare part of it, but the service industry is on an explosion. And the government didn't help the matter. They hired 70 some odd thousand people. 70. So it starts maybe with them. Another thing that happened today, the U.S. Treasury said, okay, we'll bow to the pressure. And now the SUVs that didn't qualify, that are electric, the Lyric Cadillac and all, they're all going to fall in for the $7,500 number. Elon Musk won another case. He won that Twitter lawsuit against him. So he did have the money. It's over. And he wasn't lying, apparently, otherwise they'd have found him guilty, that he was thinking of taking Twitter at that point private. Okay. Or Tesla, it doesn't matter. It was Twitter, but now he's done it all. All right. So each time he's been taken to court, these people have put up a lot of money and they haven't won from him. So, you know, he's not only one of the richest men in the world, one of the brightest by far. He does pretty good in court. When we look at the S&P on a weekly chart, folks, this is not a bear-looking chart. It is a market that has come up into a resistance area. but it's not a bear chart. And we know that the market's liable to feel some selling pressure. It saw it today, but it didn't crash. The number as bad as it was, and then we saw the bonds and the notes and the yields come going back into the market. The 2 10-years in the, high 70s right now, 77 or so. Okay, but the market's absorbing it. On the breaks, I think the pros will be looking to see where the support comes in. Now, the resistance is here. Understand where you're at. Again, you're making a run at the 100-week average. Each time we've come up to it recently, it has been a number that's given the market a problem. You knocked on the door of it. That number was 419.90 and you got to 418.31. I think it's close enough. What you did hit is the upper Bollinger Band. So when I teach you in my enhanced Bollinger Band course on our website under education, what do you do the first time you hit a Bollinger Band? I mean it. You're overbought. You ran into that number. I think the pros earlier in the week got out completely. That's how I teach it. Does it mean that they all did it? No, of course not. But that's what I teach, because the high probability trade was to come out up there and just walk away for a bit. Now we see what the market's going to do. When you come to KBE, the market's doing the same. You're back into the Bollinger Band 100-week average. You buy it. I don't want to own it at that point anymore, because the odds of you staying over a Bollinger Band alone are only 5% of the time. And the first challenge with it of the 100-week average is often a point where professional money, in my experience level of it, and I've only got this 53 years now of it, backs away from the market. When we look at XLI, not the same. This is bullish. You've got your embedded reading. The market is sitting and playing a game at the 100-week average. It could still surge to the upside. You'll say, Ira, that's the industrial sector. That's not where the money's going. You're not right. Until you lose the embedded reading, it is where it's going and where you're going. Do you think everybody that was hired was just service? I have buddies that are in manufacturing, and they keep trying to hire people. They're telling me it's getting a little bit easier and they're not paying up as much. That's what you want. You want more people there so you don't have the wage pressure. Is there anything wrong with everybody working? No. But we need to control the inflation it causes, so the Fed isn't going to pivot anytime soon. I know that there's a whole school out there that is convinced I have no idea what I'm saying. And I agree with you. I probably don't. But I'll keep saying it. There's no way that this report got the Fed members going home and going, yep, we should pivot come June, July. I think we should definitely do it. Yeah, those jobs don't mean anything. You think that's what they're saying? Then we get to the energy sector, and what's missing here is China. China came back from the lunar holiday. We have no idea how many COVID cases we have. We know that we have a balloon over America that's a weather balloon, according to them. Get serious. Shoot this damn thing out of the sky. Find an area, figure it out. You can bring back people from space. You can figure out, Mr. Pentagon, how to take this thing down. So you're here, you're fighting that. I want energy prices to come down. You know why? I want us to refill our strategic reserves. We diluted that dramatically. Now do it. But Mr. President, listen and listen carefully. Shut your mouth with the politics. Don't tell people, I'm telling my staff to go out and buy right now the crude, and here's the prices we're going to do it. Stop that nonsense. Tell them to go do it, and then after it's all done, you say, and by the way, guess what we've been doing or we've accomplished. Please, it's a pretty please. I agreed with Trump on that. I'm not saying I agreed with him on an awful lot of things. I agree. You don't tell the market what you're going to do unless that's the design of it. It can't be the design is you're trying to refill your reserves and you're telling people, hey, why don't you get ahead of me and buy? I'll be there covering you. Doesn't make sense. All right, now we get over to FXE. So I'm looking at this pullback as the opportunity to buy. What we know is the Fed is going to do increments of buying, but we know that the European Central Bank is going to do gallops of buying. They're going another half point already. They told you so in March. And if they get jobs data like we had, oh boy, they'll go another point or two, right? I'm not saying they'll have that, but we're so strong as an economy, it's unbelievable. Look at what you've got here. I'd like to know if any of the immigrants at the border that we do let in are making up these people that are working. I wish somebody would tell us about that. We got a higher high, a lower low. What is going on there? I think because you're embedded, you play that. Until the red line closes under 79, I think the market will use the brakes to be buyers. In the gold market, you got to be a little careful here. You close right on the lows with an 84 reading. You're going to drop hard. You might be near an 80 reading when you reopen on Monday. But take a look. That it could be the buying opportunity. I'll be all over this market all week long. So I'm looking at this. If you lose the embedded reading, I think you get back into that 168.49, 165.98. But I don't think, I want to go on record, I don't think this is going to turn into a bear market. I think what will happen is the Fed's going to raise interest rates probably 2 more times now. I think this bakes it in. I do not expect that they're going to pivot away this year of 2023 from lowering rates. I think those people that are saying that are wrong. If I'm wrong, I will eat crow here. I don't think I'm wrong. I don't think the Fed, especially the Fed chair, after seeing today's numbers, I think he's pissed. And he's got to stay the course. And the economy is so strong, he's not hurting the economy. Stay there, and you got to let time take its impact on it. As we slow down manufacturing and housing, you got to be able to hit the other parts of the economy. You don't want to jump interest rates and hurt the economy. You want to give it time. That does not mean pivoting. When I come to the gold miners, well, if gold's going to get hit, this will. So what else? Do I not tell you over and over, generally, not every time. I wish everything worked all the time. But the first challenge of a combination of a 100-day and a 200-day average and a Bollinger Band, you hear me say it to you over and over. That's where I think the professional money comes out. And I know you'll say, but Ira, it went higher. It's all about zones. It is not about the high and the low. And that's what I think will happen. Tesla, I'm sure Tesla, it was up this week. I'm sure it's going to do very well next week. Now the trial's over. He can turn his attention back to his Twitter baby, his Tesla baby. And the government doing this for the cars doesn't hurt Tesla. It helps everybody. That $7,500 credit gets the automotive companies going again. We want that, folks. We want the cars made here. We want to get it done. If it takes that, you got to give $7,500 away. I hate to say it, it's helicopter money again. It's limited to those buying cars, but it's what it is. In ARK, the new NASDAQ, is this woman got guts? This is a woman who watches her fund collapse 70%, and she is now the new NASDAQ. I mean, you talk, in a man, I would say, a part of their lower appendage. Unbelievable. She talks like she's a winner. She isn't a winner. She's got a fund that if you believe in it, it makes sense. If you believe in the high tech. But understand, I don't even have the room on the chart to show you how much it's down. There is a time and place to own tech. Is this it? That I don't know. But I was amazed. I give her credit, by the way. She's gutsy. She keeps saying, hey, we are a whole different thing. You got to have a 5-year horizon. Of course, you get wiped out in the 5 years. But now that it's back here, I think it's bottomed. I do think her funds have bottomed. So interesting. But I applauded her. I go, this woman has got the guts. Apple. So we know that Apple, no matter the bad number that comes out, this is probably the most loved company in America. People really believe in it. I do, by the way. So I'm not a guy that does not. I'm not changing my phone to one of the other phones. Once you're an Apple person, you're an Apple person. I get it. And their service business is picked up and the other things are carrying it. But you are at a resistance point. So this is the spot that if you're sitting next to me, I'm going to jab you in the side and go, yeah, take some money off the table. I know they're talking, it's going back to the 175 level up here. You got time. Meta has been, wow, what a performer. So this was an $84, $85 stock that has doubled. It's this week gotten its first week way over the upper Bollinger Band. You can go another week or two. You can target up there, but I think it's time to take money off the table. You're over the band. You live on barrel time. You've had your home run. Be careful. TLT, you know it's going to come under pressure now. Do you honestly think on the David Rubenstein show, if David asks the questions he should, are we going to, what happened here? You know, you were talking like blah, blah on Wednesday. This is the chance of the cleanup. It shouldn't be bullish for these markets. I could be so wrong here, but I don't think I am on that. You're overbought. You've had your run. You couldn't quite get to the upper Bollinger Band. That's what I was looking for. If you get back under the 105.39 level, be careful. You're probably going back to 102. Am I a super bear? I am not. Do I think that the Fed is going to drive interest rates and take this back to these levels? I do not. So we'll see what happens. There's the end of my news. That's where I keep my news. I have so many variations of news, I can make you dizzy with what I do. But what I don't want to make you dizzy with, and what I want you to do is I want you to join me. You know, in the mornings, this is the baby stuff you're looking at. The meat is where I'm saying, I want you to buy here, buy at the market, here's your stop, get in here on the pullback, sell out of here, go short there. That is what I do. I cover 40 futures, 40 ETFs each day. I start recording futures between 5:15 and 5:30, publishing before 6. I start recording my ETF spiders, and I do those intentionally at 9. I want all the government reports to be out. I want to see how the half hour of trading goes, where the algorithms are coming in, waiting for the reports. Then we want to hit it. And I am all over these markets. There are times I'll tell you, I don't know where you're going to get the money to cover all the trades, and other times now there's nothing to do. The charts dictate the action. And there's the beauty. I'm teaching you what I'm saying. There's 5 indicators you're going to look at. I think you can master 5 indicators. We're going to look at moving averages, swing lines, window envelopes, Bollinger Bands, and slow stochastics. That's it. Not interested in anything else. Each one's built to filter the other out. What you're looking for is a reason to not trade, and when they don't tell you not to trade, you trade. Does that make sense? You also apply money management all the time. So I want you to join me. Please do it. All you got to do is go to our website. Under the word research, you can click up here. It'll take you to that area as well. You can call my staff if you need help. I'm Ira Epstein. You have a great weekend. I will see you all come Monday. Take care.